you ever heard the saying, sell in May and go away? I want to look at all the markets, cryptocurrency, equities, commodities, penny stocks, and see which one has the best bang for your buck. And to do this technical analysis, we're going to use channels, so keep this in mind. We're also going to use the Elliott wave, and keep in mind, after a big uprun up against resistance comes an ABCD pattern correction. Sell in May and go away is based on the market's underperformance from the months of May to October. Then in the winter, from November to April, we get what? The Christmas rally. Here we are in the SPY 20-year 1 month. And you can see from May to October, there's been some real big down moves. Even if the market didn't go down, you could see that it was kind of flat. Not much in the way of performance. And then you see the market boom up, giving you that Christmas rally. So just based off this information, you could just trade for 6 months of the year and get better results. Now, the warning of May. If you see all of these big rallies down started in May. And today's the first day of May. Next, I want to talk about sector rotation. I wish it as easy as get into transport, make 100% profit, then move into capital gains, take that and move it into basic materials, take all your profits from there, move it into energy, and follow each one of these sectors. As you take 100% profit off the table, move it over to the next sector, and you're going to make another 100% profit. But it just doesn't work like that. The way we define entries is buy low, sell high, no matter what the rotation tells us. So when we see the Dow Jones at all-time highs up against the top part of the channel, it makes me wonder, are we getting ready to come back down to the bottom of the channel? If we're right here on a bullish channel, what happens next? Sell off down to support. If we're right here at resistance on a horizontal channel, what happens next? That's right. It goes down to the support level of that horizontal channel, which will make this bearish channel, which will follow the process of the Elliott wave ABC pattern. To me, this is what the S&P has done for the last 100 years. You had leg 1 up and then the retracement down. Leg 3 with an ABCD pattern in the middle of it, then a leg 4 into where we are right now, leg 5. Anticipation of correction. Now, everybody's talking about all-time highs on Bitcoin and all-time highs on Dow Jones SPY. But that's two different things because the Dow Jones is at a 100-year all-time high. If we use this exact same chart and say that this is Bitcoin at 20,000, right? So Bitcoin came out in early 08, ran up to 20,000, then had a huge sell-off, just like the Great Depression. We called it right around this leg 2 breakout. Price on Bitcoin has rallied up to this $60,000 point and now is consolidating. So for me, just considering patterns, cryptocurrency is about to break out in a big way, while indices are getting ready to fall off in a big way back down to the support channel. So when you're considering a sector rotation, you have to scroll through each one to see where it is. Low or high. XBI, low or high. XHB, low or high. XLB, low or high. XLF, low or high. XLI, low or high. XLP, low or high. XLK, low or high. XRT, low or high. So if those were high, then we can't buy those, so you might as well just cross those off. Which, as good as this system is, it doesn't beat buy low, sell high. So what do we have left? Energy and basic materials. Is gas low or high? So if you buy low, sell high, XOP could be a choice for you. Same with XLE. Look at last time it was low, how high it went. Buy at 50, take profit at 100. So we're talking about what market and where to put your money to get the best results. And these are the only sectors that really say, hey, we'll take your money and protect it for you. Everything else says there might be a sell-off. Now, good thing for you, if you're an options player, let's look and see about that sell-off. So if XRT sells off, maybe we'll get a rally in the implied volatility, which would make those option values go up. Based on history, when XRT falls off, we see rallies in the implied volatility, which means double whammy. Same with XLY. Also with XLV, you have a nice Elliott wave run up. You can see the beginning, leg 1, moved around the same range as leg 5. Then we see a nice big ABCD pattern for leg 3, meaning we're getting ready to see a correction. And as that correction happens, will implied volatility go up on those naked put options? XLU goes down, puts go up. XLP, price goes down, value of puts go up. XLK, XLI. Unprecedented low volatility on a lot of these stocks. Great way to hedge against your portfolio if you don't believe me and you just want to protect yourself. Great way to make a lot of money if it works out. Sell in May, go away, and those puts will gain value as the price drops. Now for all my baby bumpers. So here's the SPY, the standard. And from top to bottom, we moved 35%. And here's my worry. If we go over to our penny stock list and see what happened during that same time frame, we can see a lot of penny stocks did not hold up well. This one moved almost 90% down. This one moved almost 50% down. Right here, we had a big earnings announcement, but price sold off even lower, giving it an overall move of 75% to the downside. So when you're looking at penny stocks and you come over, you see your baby bump, huge run up, then sell off 50%, seems like a great place to buy. And there are tons of stocks doing that right now. Just buyer beware that price might come a little bit lower, and you have to add to your position. The system's a great system, but timing is everything. And if the overall indices might be falling off because they're hitting resistance, then we got to anticipate that penny stocks might do the same. I wouldn't say sell out of your penny stocks, but at least be aware that they might go down if the market goes down also. Get your list ready, start getting your cash ready so that you can be able to buy back in. Where? Well, you can wait for price to break out of your downward channel, or if price moves another 50% lower, buy in. Now, if you're wanting to experience a rally like what happened in the SPY after the pandemic, then you're going to want to use the baby bump system. Price breaks old highs, goes down 50%, and you buy in to catch that next move up. You're going to have to go to Kraken, BitTrue, or KuCoin. We have links in our bio, and look for things like TRX. You have horizontal channel, price breaks that horizontal channel, then runs up. You find your high, 18 cents, divide that up, and you find your entry point, 9 cents. Price came right down to it, and now is going back up. If it just reaches these old highs, that gives you 100% profit. If you go to our videos about range box analysis and being able to give you some outside targets, you'll be able to get 200, 300, 400% more. Right now, my hope is that we hit that Elliott wave high. We're selling off. Right now, making a little bit of pullback into that ABC pattern, and we'll start to go lower so that we can buy in even cheaper, giving us way more upside potential. Keep following the channel and we'll let you know. So to me, money is valuable. Where you put that money and what returns you're going to get off of that money is very important. Out of all these things that we looked at, naked options is probably the best. Not the safest, so just use small amounts. Cryptocurrency is probably the safest. I think we're at the beginning of a bull run, and from here, we should have massive volume up. If you only like stocks, that's fine, then go into some of the commodity stocks. But the returns won't be as big. Either way, I hope you the most success. Thanks for joining.